Hey everyone, welcome back to Corporate Decoder, the place where we crack open those confusing corporate reports so you don't have to, and maybe, just maybe, find a few hidden surprises inside. Today we're diving into the semi-annual report for the ABS Insights, Emerging Markets Fund, and you know what that means, lots of numbers, charts, and maybe a few head scratchers along the way. But before we get started, the fund has over $100 million in assets and invests in emerging markets. So there's potential risk and reward. If you appreciate getting straight insights from corporate documents, make sure you're subscribed and come join our Discord community linked in the description below to chat with other viewers and get access to exclusive content and behind the scenes updates. Alright, let's start with the fund itself. The ABS Insights Emerging Markets Fund is part of the Northern Lights Fund Trust III, and it aims to make your money grow over time by investing in emerging markets. Basically, they're looking for the next big thing in countries that are still developing their economies. This report gives us a snapshot of how the fund performed for the period from early January to the end of March this year. So it's a quick look at how things are going. Let's talk about costs. If you had $10,000 invested in the super institutional class, the cost would have been about $65. That translates to 130% of your investment going towards expenses. This percentage basically tells you how much of your money is being used to run the fund. Keep in mind that expenses for the full year would be higher because this is only for half a year. Now for some quick fun facts. As of the end of March, the fund had about $100 million in net assets. They held 28 different investments, and the advisory fee, the cost of having experts manage the fund, was roughly $135,000 during this period. The portfolio turnover was 57%, which means the fund changed more than half of its investments during that time. Where did the fund put all this money? Most of it, 78.2%, was in common stocks, followed by exchange-traded funds at 18.2%. A smaller portion was in money market funds and preferred stocks. These weightings tell you where the fund sees the most potential for growth. The sector weightings tell us what kind of industries the fund likes. Technology took the top spot at nearly 20% of the net assets, followed by financial companies. They also had a decent amount in equity, which is just another way of saying stocks and consumer discretionary products. Now let's dive into the big players in the fund's portfolio. The largest holding was the iShares MSCI India ETF, making up over 18% of the fund's assets. After that, Taiwan Semiconductor Manufacturing came in second place, and Tencent Holdings Limited was number 3. Good news here, no big changes happened during this period, which suggests things were pretty stable. Now let's get into the financial statements and see how the fund is doing financially. This fund started operations in early January, so this is really a quick look. The fund's investments were valued at roughly $100.7 million. After adding cash and other receivables, the total assets were about $109 million. The fund had total liabilities of about $864,000. Taking all those liabilities into account, the fund's net assets came to just over $100 million now. The fund had a total investment income of around $372,000. After deducting expenses, the net investment income came to about $152,000. When we factor in realized and unrealized gains and losses on investments, the fund saw a decrease, so there's a loss on those investments overall. After all is said and done, the net increase in net assets from operations was about $85,000. In terms of how the fund is owned, there was about $100 million worth of shares sold. That brought the total net increase in net assets to that same $100 million mark. At the beginning of the period, the net asset value per share was $10. By the end of the period, it went up slightly to $10 so it increased a little bit. The ratio of net expenses to average net assets after fee waiver was 130%. The portfolio turnover rate was 57%. Let's briefly touch on the accounting side. The fund values its securities at their estimated fair values. It uses different levels to determine these values, with level 1 being the easiest to value and level 3 requiring more guesswork. The availability of observable inputs can vary from security to security and is affected by a wide variety of factors. Scroll us insights at our Emerging Markets Fund scroll. Here's a peek at the fair value measurements. Most assets fall into level 2, meaning they're valued using observable inputs but not directly from active markets. This is common for many investments. During this period, the fund made a lot of buys and sells of its investments. They also invest in foreign securities, meaning they face extra risks like currency changes and political instability. The advisor, ABS Global Investments, manages the fund and gets paid a fee of almost 1% of the fund's assets each year. They also agreed to waive some fees to keep the fund's total expenses below a certain level. Also, it looks like two entities, Northern California Employee Joint Pension and Construction Laborers Pension Trust for Southern California, owned all of the fund's outstanding shares. Scroll proxy, as a disclosure, just a quick note that you can find details on how the fund voted on company matters and their voting policies. That calm. Now, what does all of this mean? Based on these numbers, the ABS Insights Emerging Markets Fund is treading carefully into promising but tricky markets. The fact that they are so diversified is smart because it protects them from any single company messing up. The portfolio turnover is concerning because it can lead to high costs, and it's not clear yet if their active investing approach is really paying off since it's so early to tell. The fund's costs are reasonable, though a bit on the high side compared to cheaper index funds. Even though there aren't significant changes to report this period, it's crucial to watch how well they manage risks and handle any market volatility that comes up. In the future, they might consider reducing turnover and continuing to diversify their assets to reduce risk. Alright, that's our breakdown of the ABS Insights Emerging Markets Fund. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And come join our Discord community linked in the description below to chat with other viewers and get access to exclusive content and behind the scenes updates. Thanks for watching. See you next time.